Same numbers, total different decisions. Time to master financial and managerial accounting. The confusion comes when you see the same numbers but don't know what to do with them. Sales, expenses, profit, but wonder, should I raise prices? Can I hire? Why am I profitable but short on cash? That's because financial accounting shows outsiders what already happened, while managerial accounting helps you make decisions for the future, like planning, forecasting, and budgeting. Once you know which numbers to use and when, you can finally make smart, confident business moves without getting lost in the chaos. Here is the simplest way to see it. Financial accounting is all about reporting, showing what happened, while managerial accounting is all about decision making, guiding what to do next. Is the same business, the same numbers, but two very different goals. Keep this model in mind and it will make everything in the video click. Financial accounting focuses on external world and looks at the past. It records all your transactions and presents them in a standardized format so outsiders like banks, investors and governments can trust and compare your numbers. Think of it as your business's official financial report and report card showing exactly how it performed. Financial accounting is used by investors, banks, tax authorities, and owners who aren't involved in your day-to-day operations. They don't need to know how you made decisions. They just care about results, stability, and compliance. That's why financial accounting follows strict rules like GAAP or IFRS to keep everything trustworthy and consistent. Financial accounting produces three key statements: the income statement, which shows performance, the balance sheet, which shows the company's position, and the cash flow statement, which tracks actual cash movement. Together, they answer the big question every outsider cares about: what happened financially. Managerial accounting is all about internal world and making smart future focused decisions. Unlike financial accounting, it doesn't follow strict rules or worry about outsiders. It exists to help managers, founders and freelancers plan, budget and steer their business. Simply put, this is the accounting you actually use to run your business. Managerial accounting helps you plan, control, and improve performance. It answers questions like: is this project profitable? Where are costs leakage? What happens if sales drop 10%? Unlike financial accounting, is flexible, detailed, and updated frequently, so you can make smart decisions, keep your business running efficiently. Managerial accounting uses tools like budgeting, forecasting, cost analysis, break-even calculations, and KPIs to turn numbers into actions. Budgets help prevent surprises. Cost analysis protects your margins. KPIs reveal what's working and what isn't. That's why managerial accounting feels so practical and hands-on for running a business. Here is the easiest way to clear the confusion. Financial with managerial accounting side by side. Financial accounting looks outward to outsiders, focuses on the past, follows strict rules and is all about reporting. Managerial accounting looks inward, focuses on the future, is flexible and is all about making decisions. They are not competitors, they are partners, each guiding different sides of your business. Take freelance designer as an example. Financial accounting shows yearly income for taxes, while managerial accounting tracks weekly project profits. The same numbers but different purposes. Managerial accounting tells them which clients pay best, which projects waste time, and when to raise rates, helping the business survive and grow. For a small business, financial accounting produces monthly reports for banks, while managerial accounting tracks daily sales and inventory for real time decisions. Banks care about clean statements, managers care about actionable insights. Rely only on financial accounting, and you are basically driving your business using the rear view mirror. The biggest mistake people make is trying to manage a business using only financial statements, using reports to make decisions, ignoring internal costs, or skipping budgeting leads to trouble. Financial accounting explains the past, it doesn't protect your future, which is exactly why managerial accounting is just as important. To master both, start by reading financial statements and understanding accrual with cash. Then learn budgeting, track costs, and monitor KPIs. Begin with financial basics, then layer in managerial skills. This turns you from someone who just reads the numbers into someone who actually controls business outcomes. If you remember just one thing, financial accounting is the scoreboard, managerial accounting is the game plan. Financial accounting shows the score, what happened, while managerial accounting decides how you play the next round. To win in business, you need both. Now, I want to hear from you. Which do you use both? Financial or managerial accounting? Comment below, like the video if you this finally cleared things up, and subscribe for more practical financial tutorials. Thank you very much.